China just made a bold move that could shake the global financial system to its core. Gold has always been more than just a flashy metal. It's a symbol of power, wealth, and financial security. But China's recent gold-buying frenzy is sending shockwaves through the global economy. The US isn't too thrilled about it. Over the past year, China has dramatically increased its gold reserves, signaling a major shift that could challenge the dominance of the US dollar. Could Beijing's bold strategy reshape the world's financial landscape? China's aggressive push to stockpile gold isn't just about money. It's a calculated geopolitical move. Since the 2008 financial crisis, both China and Russia have been steadily boosting their gold holdings to reduce their reliance on the US dollar. The People's Bank of China, PBOC, has been on a relentless buying spree, increasing its gold reserves for 17 straight months. By December 2024, China's total reserves hit a staggering 73.229 million ounces, an increase of 300,000 ounces from the previous month. This surge in gold buying came after a 6-month pause, likely influenced by growing trade tensions with the US. Now all eyes are on China as it continues to shake up the balance of global markets. Beijing views gold as both a safeguard against potential Western economic sanctions and a stabilizing force for its financial system, especially as the yuan faces mounting pressure. Gold's true power lies in its rarity and universal acceptance, making it a reliable asset when traditional currencies fluctuate. By amassing vast gold reserves, China isn't just protecting its economy, it's strategically positioning itself to challenge the US dollar's dominance in global trade. But China isn't stopping there. Its next move could send even bigger shockwaves through the gold market. Gold's meteoric rise isn't just about China. It's a reflection of global instability. At the start of 2025, gold prices soared to an all-time high of $2,849 per ounce as trade wars, inflation, and geopolitical tensions, especially in Ukraine and Taiwan, rattled markets. With uncertainty at an all-time high, investors have rushed to gold as a safe haven, and central banks are following suit. According to the World Gold Council, central bank gold purchases hit record levels in the first half of 2024, with China and Turkey leading. The charge followed closely by India. This growing preference for gold over the US dollar marks a significant shift in the global financial landscape. Metals analyst Ross Norman put it best: gold's surge is a clear sign of market anxiety over trade wars and their potential to destabilize the global economy. But Beijing's gold-buying spree isn't just about stacking reserves. It's a power move to establish China as a key player in a new financial order. If China begins backing the yuan with gold, it could strengthen the currency's credibility and directly challenge the dollar's supremacy in global trade, giving Beijing a significant advantage in future economic battles. And just when you thought China's gold strategy couldn't get any bigger, a massive discovery has taken things to a whole new level. Before we dive into the details, don't forget to smash that like button and subscribe for more updates. China's gold strategy just got a major boost with the discovery of the Wanggu gold deposit in Hunan province, one of the most significant gold finds in recent history. This massive deposit is estimated to contain 100 metric tons of high-grade ore, valued at a staggering $83 billion. Initial explorations have already confirmed 330 metric tons, but experts believe another 770 metric tons could be hidden deeper underground. What makes this find even more remarkable is its gold concentration, 138 grams per ton, far surpassing the global average, making it an incredibly valuable resource. This discovery further cements China's status as the world's top gold producer, accounting for around 10% of global production. By increasing domestic gold supply, China can reduce its reliance on imports from major suppliers like Australia and South Africa, giving it more control over its financial security. It also strengthens Beijing's position in trade negotiations and serves as a buffer to help stabilize the yuan during economic turbulence. However, large-scale mining isn't without its downsides. Environmental risks like soil erosion and water pollution are real concerns. But despite these challenges, China is likely to push forward, prioritizing the economic and strategic benefits over the environmental costs. But this gold rush isn't just about controlling supply, it's part of a much bigger plan. China is using its growing reserves to challenge the global financial system, particularly the dominance of the US dollar. For decades, the dollar has been the world's primary reserve currency, backed by the strength of the American economy. However, that grip is slowly loosening. According to the International Monetary Fund, IMF, the share of global foreign exchange reserves held in US dollars has fallen from 71% in 1999 to just 59% by the end of 2024. While the dollar still reigns supreme, the shift towards diversification is undeniable, and China is leading the charge. By aggressively stockpiling gold, Beijing is positioning itself to create an alternative financial system, one that could partially be backed by gold. If China were to scale back its US Treasury bond holdings, or even hint at selling them, it could send shockwaves through global markets, potentially driving up borrowing costs in the US and Europe. And China isn't alone in this strategy. Countries like Turkey and India have also been ramping up their gold reserves, signaling a broader global shift away from dependence on the dollar. If China moves to partially back the yuan with gold, it could give its currency greater credibility on the global stage, shifting the balance of financial power. But the impact of China's gold strategy extends far beyond finance. It's also about changing the way global trade operates. If major commodities like oil, metals, and agricultural products start being priced in yuan instead of dollars, it could weaken the dollar's influence in international markets. Countries with strong economic ties to China may begin holding more yuan reserves instead of dollars, further accelerating this shift. At its core, China's gold accumulation isn't just about financial security. It's a strategic power play that could reshape global markets for years to come. The world is watching closely as Beijing continues its gold rush, and the implications could be game-changing. This would give Beijing a stronger hand in trade negotiations and allow it to sidestep US-controlled financial institutions like the International Monetary Fund, IMF, and the World Bank. While this transformation won't happen overnight, the foundation is already being laid. China's growing gold reserves are part of a larger strategy to secure financial independence and push for a more balanced global financial system. If successful, a gold-backed yuan could emerge as a legitimate alternative to the US dollar, giving China greater control over international trade and financial movements. So, what does this mean for China and the US? China's aggressive gold accumulation is a bold and calculated move with major implications for the global financial order. The discovery of the Wangu gold deposit gives Beijing even more leverage, while its expanding reserves act as a safeguard against economic uncertainty and potential US sanctions. If China successfully links the yuan to gold, it could seriously challenge the dollar's dominance and reshape the way global trade operates. The real question now is, how will the US respond? Will Washington take strategic action, or will it allow China to redefine the global financial system? The next few years will reveal whether China's gold rush is a masterstroke of economic strategy or a high-risk gamble. What do you think? Could this really signal the end of the dollar's reign? Share your thoughts in the comments below, and if you enjoyed this breakdown, don't forget to subscribe to Torque Garage for more insights on global markets and financial shifts. Thanks for watching, and we'll see you next time.